Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. On November 30th and December 1st, Mizuho Americas hosted its second annual U.S. Utility Summit featuring 22 gas and electric utility companies. Joining me to discuss key takeaways and outlook for the space in 2021 is Gabe Moreen, Managing Director at Mizuho Americas. Gabe, it's great to see you. Welcome to Trade Talks.
Thanks, Jill. It's great to be here.
And before we get into outlook, how did utilities fare overall in 2020?
So utilities have trailed the market year to date. They're up about 3 or 4%, although there's a wide dispersion. Some of the bigger utilities have fared much better. And in particular, two areas, the smaller utilities and the gas utilities have really trailed the utility group in the overall market.
Let's discuss themes out of the summit. Where are utilities focusing their capital spend?
Sure. A lot of them are, as you would expect, focusing primarily on renewables and areas where they can grow. Surprisingly, some of the utilities we cover have seen very good customer growth this year, despite economic impacts from COVID. That's new customer connections from moving to the suburbs or perhaps moving into new service territories. But we're also seeing a continued push to renewables and safety on the electric side. A lot of that has to do with new electric transmission to get renewables onto the grid. And on the natural gas side, a lot of that has to do with safety spending and continuing to replace older pipelines.
And utilities are a heavily regulated business. Explain to the Trade Talks audience what rate case proceedings are and how utilities are responding.
Sure. So utilities are regulated at the state level. And when they spend money, they essentially go to their regulators and say, look, I spent this amount of dollars on transmission, this amount of money on my pipeline grid. I need to earn a rate of return and recover the cost of what I'm spending in what's known as my rate base. And utilities try to grow their rate base over time. And that's how they essentially grow earnings. Now, they'll go in front of their regulators for what are known as rate cases, which happen periodically, or basically they'll true up what their costs and their revenues are, and regulators will see to it that the utilities are allowed a fair return on their investment.
And Gabe, ESG, of course, is at the front of investors' minds. What are utilities doing to advance ESG goals?
Sure. So they're really working hand in glove with a lot of different state regulators. So far, there's no national mandate, as you're aware, on renewable energy, but a lot of different states are putting different mandates out there in terms of the amount of electricity that they want generated from renewable sources. So utilities are out there either partnering with third parties to bring more renewable generation into their systems, or they're out there actually building some of their own renewable energy themselves. On the natural gas side, it's a little bit longer dated, but over the medium to longer term, utilities are looking at getting into renewable natural gas, which is natural gas from sources like landfills, and over the longer term, trying to introduce hydrogen and other less carbon intensive fuels into their systems.
And are management teams looking for organic growth or more focused on M&A? Where would be the new investment opportunities?
I think most management teams would tell investors that they are 100% focused on organic, but utility M&A and a lot of utility M&A rumors have been circulating over the last couple of months, and we wouldn't be surprised to see a number of deals happen both in the electric and the gas side over the coming quarters. The organic runway is pretty considerable for utilities, but I think utilities are always looking potentially at M&A deals which could supplement that organic growth, give them scale as well, and it'll be interesting to see where the M&A part heads over the next couple of quarters.
And looking ahead, how do you think utilities will perform in 2021 as we look to a new administration and get to the other side of COVID-19?
Yeah, so hopefully we're feeling optimistic, hopefully get through COVID sooner rather than later. That has had some negative impacts on utilities in terms of higher bad debt expense, for example. So getting through some of those hurdles, I think, will be a near-term positive. The interest rate backdrop seems very favorable for utilities since interest rates are likely to remain low. And I think utilities think in terms of multi-year outlooks, and the multi-year outlooks that we have for the ability for utilities to spend on renewables and safety in other areas is intact despite COVID. So we're optimistic that investors will find that favorable.
All right, Gabe, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.